good evening. Many of you may never have heard of Equals Group. Some of you may have heard of FairFX. The business is going through quite a seismic change at the moment. We are going through a complete rebrand. FairFX of old is now become Equals. We started with the listed business a couple of months ago, and ongoing we're rebranding our whole product set. So I'll try and outline exactly what we're doing and why we're doing it. First of all, a little bit about the management team. A few years ago when we floated, it was pretty much the CEO and that was it. And I think we were probably criticised for being fairly light on the exec team. Over the past few years, we've really expanded that out, and now you can see before you that is the complete exec team. Our latest hire, Richard Cooper, came from GVC Holdings and helped them grow that business significantly. The payments, international payments, cards, very complicated business, so you do need the expertise behind it to make it work. A little bit of history around the group. As I say, started with FairFX, really started as a consumer travel brand, issuing prepaid cards and delivering travel cash in the post. Quite quickly, we launched international payments and then started to acquire customers, both corporate and consumer, on various other bits and pieces. We were admitted to AIM back in 2014. Probably a little bit early, actually, in the company's cycle. That said, over the past couple of years, it's really helped us. I think a couple of things to point out here, a couple of milestones. We acquired an e-money license back in 2017, really with the whole premise in mind to actually try and do as much of the supply chain ourselves as possible, simply to make sure that we're retaining all the margin. We also acquired a business called Card One Banking, it's now called Card One Money, to improve our technology and to allow us to offer pretty much full service banking to both businesses, SME businesses and consumers. Most recently, and I'll touch on this a little bit later, we've entered into a partnership with a US bank called Metropolitan Commercial Bank. This allows us to market and sell our products and services across the US in every one of the 50 states. So it's quite a big milestone for us, and we've actually just launched our international payments bit there, and we'll be very shortly after launching the corporate expense platform. Another, I think, highlight this year is the connection to the Bank of England, direct connection to the Bank of England. So ultimately, this allows us to connect to the faster payments network. I highlight this because it was a huge amount of due diligence done by Bank of England themselves, and it really highlights our expertise within the payment space. I know a number of businesses that have tried and failed, so it was a real sort of feather in our cap to get that done. We hit 1 million customers this year, which was fantastic news. As I mentioned, our product portfolio is expanding, and with an increased product set, obviously, we're expecting revenue to grow as well. And certainly for the first half of this year, which we announced last month, you can see the numbers speak for themselves. So we've seen significant growth. Again, I'll touch on these highlights because I think they're really important for the group. So the US launch, as I mentioned, we're pushing into the US this year and with force next year. All the groundwork now been done operationally. As I mentioned, Metropolitan Commercial Bank, our partner, allows us to deliver our products and services in the US without huge expense. To go into every single state in the US is massively expensive from a compliance point of view. We've done it in a cost-efficient way, really to test the market first of all, without committing huge funds, but also they're going to assist us together with our card partner MasterCard in entering that market. The other big partnership that I wanted to touch on was Citigroup. Now, as a global banking supplier, you can't get much better than Citi. They have a footprint in pretty much every country in the world. And within our industry, or certainly in the sector, international payments, or the international payments division of the business, it's vital that we have the fastest, the cheapest, the best, most efficient way of transmitting money across the globe. Citi, without doubt, is the number one player. They only take on large businesses, and again, after significant DD, we're now going through setup with them. What that will do is reduce our costs, both on the FX side and also the payment side as well. And it also means that we can transmit locally, receive and deliver internationally, locally. So from a customer point of view, it means that pretty much instantaneous payments will be available. So if you want to send money to South Africa, you pay us in sterling, we deliver in rand in South Africa within 5 minutes. So it's going to be a real game changer. We've signed a new 5-year deal with MasterCard, which again, improved terms. The increased scale that we've developed has meant that across all our partners, actually, we're getting improved terms. And this iteration is constant. So with scale, we'll get all these benefits. I touched on the fast payments. The e-money side of things, we're continuing to issue our own plastic, again, which means we're retaining more profit and more of the margin. I'll touch on a little bit about the products that we currently offer. All of these products were under the Fair Effect banner, and they're now slowly, over the next 6 to 8 months, being rebranded to Equals. The first to be rebranded was Equals Go, which is our consumer prepaid travel product, and that was launched last month. Effectively, we're using the opportunity of the rebrand actually to increase the functionality, improve the user experience, and just give a more modern look. And I think in terms of the apps and the website interfaces, as you see them develop, you'll notice there's quite a significant difference. Even with the logos and stuff, actually, you can see the whole refresh. It brings it in a much more modern look and feel. Equals Pay, which is our international payments business, and that crosses both corporate and consumer. That delivered, actually at the moment, predominantly over the telephone. We have an app, we have online. Most of our customers prefer to deal over the telephone. They prefer they want the personal service, they want the guidance, when's a good time to buy, when's a good time to sell the currency. Particularly businesses, that are trying to look at their perhaps annual FX requirement. They have liabilities. They want to make sure that they're not risking their own margins by speculating on the currency market. So they turn to us to give them guidance. One of the fastest growing bits of our business is business expenses. We have a corporate expense management platform, which effectively allows businesses to ditch their Amexes and their more expensive methods, and a lot of businesses still using cash actually, and utilise a pre-authorization business expense management. So it means that when an employee wants to spend money on a card, they request authorization, it's then approved, and then they're allowed to spend on the card. This was originally built for the international traveling market, so companies that were sending employees over the world. But actually what it turned out is that companies are using it mostly domestically. We still benefit from significant revenue, significant margin, because the interchange is far better on corporate schemes. So actually, for us, it's fantastic. And part of the reason we chose the Equals brand and didn't use Equals FX or something FX is to actually, I think, demonstrate our, in terms of product range, talking about, Nick mentioned KPIs, and we don't, once they're set in stone, they're set in stone. But one of our KPIs we are looking to introduce actually is the percentage of FX and non-FX revenue. And increasingly, the non-FX revenue is becoming more and more and more important. And the corporate expense side is demonstrating that. The current accounts, so Equals account, we launched last year something called Fair Everywhere, which was basically a marriage between our Card One banking business and FairFX. And it's effectively a multi-currency account for small businesses. So if you've ever tried as a business to set up a currency account with NatWest, RBS, Barclays, it's a nightmare. It's expensive, it takes a long time, and quite frankly, they don't really know what they're doing. What we've provided is an online IBAN, US account. You get US, Euro, and actually you can get any other currency you want, all for transactional cost only, so you're not having monthly fees, etc. And that's proving very, very popular, particularly, as I say, with small businesses that are trying to keep their overhead down. And they tend to use it to receive money in and then make small monthly payments to suppliers, etc. And that's really gaining some traction now. Most recently, we announced our credit broker license, which effectively allows us to offer loans, albeit as an introducing broker, through our platform. So we have signed a deal with iWalker, which is effectively a digital lender. They don't need to go away from our platform, so when they set up a bank account or an account with Equals, within that they're allowed to apply for a loan. Typically, loan size is anywhere between £1,000 and £10,000, non-secured, and it's ideal for the gig economy and relatively small businesses that need temporary funding for cash flow. And that is just, as I say, we launched that very recently, and we've started again gaining some traction from that. And it also, as a buy, has helped improve customer acquisition on the banking side as well. Because what we were finding is some customers were coming to us applying for an account and then being disappointed that we weren't offering lending. So actually, in terms of retention and acquisition, it's been very positive. The cash side of the business, the sort of historic bit of FairFX, we have 3 shops in the City of London. We still do postal delivery. That business will be branded Equals Cash. In all honesty, we're not expecting huge growth from that side. It should maintain, but we really see the growth and the future from the corporate side, and also from the card, the plastic. It's where the future is. A little bit about the environment that we're in at the moment. International payments is a very competitive business, particularly on the consumer side. And there are a number of players that have entered the market, new fintechs, all offering free. How sustainable these models are, we will see. As long as they can keep raising money, I guess they'll keep going until they, until there is something happens where there's money dries up, then we'll see them, I think, start to flounder. We're not pitching ourselves in that space. We're not saying we're free. We're not saying we're the cheapest. What we're saying is we offer value. We offer service. We're multi-platform. We're not app only. You can speak to us on the telephone. You can use a web. You can use the app. And we're pitching in a much more multi-product vertical. We're creating a financial services business ultimately that will assist consumers, but predominantly SMEs, with finance as a whole. So we're not just pitching in particular FX or where many of the competitors are looking. So the sort of yellow bit there is where we're covering, and you can see the different sort of competitors around it. A little bit about the numbers. So the revenue across the board significantly up. This is within the deck, which I'm sure is available online. It's broken out into retail and consumer, so you can see a flavour of the business and how it's changing. So 16.6 million revenue in 2018 on the retail side, and 9.5 million on the corporate. And we're expecting that to shift significantly towards the corporate. And that is certainly true with the product development, where a lot of the investment is going, a lot of our marketing, and so forth. So that number, or certainly the ratio between the retail and the corporate, will grow. And part of the reason for doing that is the corporate side is in terms of margins, is a lot higher. As I mentioned, just on the card side alone, something called interchange, which is basically every time you use your card, we get a little bit of money. For the consumer side, it's fixed at 0.2%, because every regulator in the world pretty much is always looking after the consumer. They don't care about business. They just make sure the consumer's okay. So corporate interchange actually is at roughly around 1.3 average. So a massive, massive difference. So absolutely makes sense to go that way. I'll skim through these numbers. In terms of what we're doing at the moment, recently we had raised around 16 million for acquisitions. And there's a unique opportunity at the moment happening with the international payments market, which is the suppliers, so the big banks, Barclays, RBS and so forth, are exiting quite a few small players. So they might be good businesses, typical revenue of about £1 million, but they don't want to service them. So that leaves an opportunity for businesses like ourselves to acquire books of clients at very, very reasonable rates. So we've done a couple. You will no doubt see quite a few more over the next few months, years. And there's a real opportunity at the moment. So we're actively chasing these opportunities. Again, product set, we will continue to expand it, improve the customer service, improve the usability, and continue to increase our margins through the supply chain rationalization. So as much as we can do internally, we will do. There's certain bits that we won't, but we'll accelerate self-issuance. So ultimately, at some point in time, we will be issuing all our cards where it makes commercial sense. Again, Equals brand new, will be increasing our marketing to promote awareness. We've started already on the Formula One advertising that we do. So we sponsor Sky coverage of Formula One. That's transitioning to Equals, or has transitioned to Equals. I mentioned our corporate expense. We're growing 35% year on year in volume terms. And that's really allowing to access not just FX, but transactional business across the UK and soon to be the US. And incidentally, actually, it's a great way to sell into a business, and then on the back of that, we can sell our other products and services as well. So in very quick conclusion, I realise I'm out of time. So 7 times year-on-year EBITDA growth, 2 times year-on-year volume growth. First half was strong, in line with expectations, and we're certainly looking for a good second half as well. So that is it. Thank you very much indeed.
On your presentation, you're an FCA authorised business. This week we find that it's not only bears that shit in the woods. How would you view an FCA endorsement going forward as a businessman now?
I mean, the FCA have been maligned pretty much since I've been regulated, 30 years. So ultimately, you need the accreditation from a customer perspective, rather than what I feel doesn't really matter. It's what the customers feel. And the way we look at it, it's part of a wider picture. The accreditation from the FCA, the MasterCard accreditation, the Bank of England accreditation, I think the whole picture adds up to giving the customer confidence. So in one piece in itself, honestly, there are thousands of FCA regulated authorised firms. Are they good? I don't know. But it's a picture of the whole supply chain.
You said that your space is pretty crowded.
Yes.
And there are indeed a lot of quoted and unquoted companies in it. Who do you regard as your competitors, and what do you see as your USP against them?
Good question. So we have got a lot of competitors, from your high street banks that are offering many of the services we do, to the new entrants, the Revoluts, the Monzos, the 10,000 other small fintechs that are launching, and everywhere in between. There are a lot of them. Ultimately, what we believe our USP and why customers come to us is brand recognition. It's what we touched on, the accreditation, so MasterCard, FCA, etc. And also it's the level of service, the personal service that we offer. Many of our competitors, and this includes the banks, by the way, if you try and ring up about foreign exchange, or you have a currency requirement, you just cannot get through. And that's the same with many of these new fintechs. Sure, you can chat via a bot, but am I going to send 100 grand over an app? Probably not. So, which is why still a lot of our business is done over the telephone in the old-fashioned way.
Sorry, can I just ask, what's your shareholding structure?
So we have, historically it was very, very tightly held. A couple of founders, key staff, but since a couple of the recent fundraisings, it's now widened out. We've got Crystal Amber is still one of our largest shareholders, and they've been supportive. They're known as quite a proactive shareholder. So if things are going right, they're very happy. If it's not going right, they're quite vocal. But we now have quite a wide base, which is great. All of the institutions you'd probably know, and ultimately as a business, we just want to increase that base.
Great. Thank you very much, James. I'll leave it there.